What's going on, everybody? Hundo Kim here, and today we're going to talk about why the housing market has gone absolutely crazy. Every month I get calls from buyers saying that they're getting pushed out of the market because the property prices are just going away. Whether they're buying homes or commercial property, it's absolutely going crazy. And if you thought the property prices were expensive today, then just wait, because things are about to get a lot crazier. From Australia, a good indication of what is actually going on and the good expose of the economy. You can see what's happening in the United States and analyze the situation over there and understand what is actually happening in this economy. Right now, the property inventory is so low that it's about 40% below what it used to be. Because of that, property prices have risen at the fastest rate in the last 15 years in the United States and the last 32 years in Australia. And this has been pushing millennials out of the housing market, and they're getting squeezed out. And not only that, investors into multiple categories of property are still suffering and getting squeezed out of the market. In the United States, average prices are above 11% higher, and in Australia it's about 9.7%. And that's crazy, because that means in some properties they've increased by more than that, which is nuts. So what the heck is actually going on? Let's get to the bottom of this. 15th of March 2020, because of an illness that the world has reacted really terribly to, the interest rate has actually hit 0%. So when everything got shut down, everyone was super worried that they were going to lose their jobs, and the economy was worried that people are going to stop paying their repayments, people are going to be evicted from their homes, can't afford to pay any rents. The same applied for businesses on commercial loans as well, which meant that the economy was really going to struggle. But shortly after, what the government organized, So shortly after, the government then releases this forbearance program, which allows for people to stop paying repayments for up to a year, which then led to the evictions and the foreclosures from happening. And alongside this, there was a lot of stimulus packages that were given to businesses, which ended up into the pockets of individuals. Because when businesses had money, they were able to keep their employees in their jobs. So the common people, a lot of the population actually had more money with lower interest rates. So they started looking at investments. So anything that could be invested into has been in their all-time highs. Stocks, there's no doubt about it, it just keeps on climbing. During COVID, it had a dip, but it's just been skyrocketing since then. Another crazy phenomenon that we're seeing is cryptocurrencies. Have you seen anything that increases any faster than that? We're experiencing double-digit returns on a daily basis. Yes, it goes up and down like crazy, but overall, the index for cryptocurrencies has been going crazy. Yet another crazy spending pattern that we're seeing in people is that people are now investing into cars. Well, it's not really an investment, it's something that they can enjoy, but hey, they've got the money and the interest rates are low, so why wouldn't they do it? So luxury cars are selling, and then the secondhand market is actually going crazy as well. And out of all this, property has been traditionally a really good investment. So of course, property prices are going to increase, whether they're commercial or residential. So here we are about a year into the pandemic, and there's about 2.5 million people that are part of the forbearance program. And there are reports that there are about 20% of the renters out there that cannot pay the rent on time. And to help people get back on their feet, a brand new proposal was introduced just recently, but this brand new proposal is not particularly different to what the proposal was before. I think it does become a little bit harder for the people to sign up to the forbearance program, but it's literally the same thing. I think it makes it a little bit tougher to people who own properties, but the program is still in place to actually mitigate a lot of the financial hardship that exists in the world today. Now, this new program that's been proposed isn't particularly different to the previous program, but it does tighten the criteria just a little bit. So first of all, this forbearance program is now going to be applied to primary residences only, which means that your investment properties will not be able to fall under the forbearance program as easily. For as long as it's a property that you live in, then the forbearance program is going to be a lot harder to kick in. Second criteria for this new program is financial hardship. But the interesting thing is that the financial hardship is not particularly defined by the lender themselves, but it's going to be at the discretion of a landlord. So as long as you own the property and you can say that you're under financial hardship, then you can basically apply for it. But the difficult thing is that how do you define financial hardship? In whose eyes are you going to be defining that financial hardship? And there is no clear distinction and a guideline as to what this financial hardship actually means. So it's really up to the property owner's discretion to put forward a case to the lender and to say that, hey, these are the reasons why I'm in a financial hardship. And the lenders have no choice but to listen and go through what's called a loss mitigation approach. And as part of the loss mitigation process, the lender will then extend options like payment plans and modification on the loan terms, and also any extension on payments. And this is all done so that the property owners will not be kicked out of their homes because of foreclosures. And one of the ways the loan structure can be modified is to extend its period, and they are allowing up to 480 months, which is a 40-year loan period. So now let's put that into a bit of perspective. If you borrow $400,000 at 3.5%, let's say over the next 20 years, then your monthly repayment is going to be $2,320. Now let's change that loan period to 40 years long, then your monthly repayments are now going to fall down to $1,797, which is a drastic decrease, and it allows for more homeowners and property owners to afford their payments. And it was also included in the policy that they will not be increasing the interest rate on the extended term. And now on all the deferrals and the extension of payment, there's going to be no fees or interest payable onto that as well, which is really the closest thing you're going to get on just a pause on the loan itself, which is quite crazy. And lastly, they put a delay on the foreclosures, that if something does really happen that a property needs to foreclose, then they'll be given a 120-day time frame for them to really explore any other adjustments they can make in their finances so they can really avoid the foreclosures on their properties. Now, this is just a proposal at the same time, so let's dig into actually what the data says to see how viable or what the effects of this program is going to be. So in the last few months, the yield on the treasury has been going up on the fears of the increase in the inflation. There was also an indication that the mortgage rates are going to get pushed higher. And what the increasing mortgage rate will do is it will hopefully bring down the increase on the property prices that are as quick as it's going right now. And this increase on the mortgage rate was going to mitigate the speed at which the properties are increasing at this moment. But funnily enough, that is absolutely not happening. And that's happening because primarily of two reasons. Number one, the inventory is decreasing, and number two, people are trying to lock in those interest rates. So for reason number, there used to be about 1.3 million active listings of properties for sale in the past, but nowadays it's just below 500,000 in the market, which means that the inventory is so low and there is not enough supply out there for people to buy their properties. And reason number two is that because of the interest rates have shown signs of little increases, people are trying to lock in the lowest rates possible to actually get into their property investments as quickly as they can. And all of this increases the property prices even higher. Now on the foreclosures, whilst it may sound like 2.5 million properties that are under the forbearance program may look scary, but the forbearance program actually stops the foreclosures from happening, which then reduces the supply even more. And this 2.5 million forbearance program has been decreasing in the last 9 months, and it's at its all-time lowest in the last few months as well, which means that the homeowners and property owners are getting back on their feet right now. And it's also interesting to note that property owners have had an average of $26,000 gain in their equity in the last 3 months of 2020. And the chances are the property owners will be able to make a lot of money if they sold their properties at its all-time high right now, even if they were in a financial hardship and even if they were part of the forbearance program too. It's also interesting to note that only about 2.8% of the properties were in the negative equity territory, which means that every other property that was under property loan is sitting above zero, which means that they can sell the property and they should easily be able to pay off the principal on the loan that they have for the property they own. So as it stands right now, the interest rates are really low and the inventory is just drying up, and yet there are still just the same amount of property buyers, if not more, because of the stimulus and because of the previous two factors. And lastly, property owners have more equity than ever in their properties to actually want to sell their property or need to sell their property. And this is a perfect storm that keeps pushing the properties to their all-time highs. So what do I think of all of this? Well, I don't think there'll be a massive outbreak of foreclosures on properties anytime soon. If we compare to what we are now to back in 2009 when the global financial crisis occurred, well, the banks were loaning money to people even without any money down onto property. On the day that they settled, a lot of the property owners had literally zero equity on their property. So if the property prices went down even a little bit, they went straight into the negative territory. So back in 2009, the people that had negative equity on their property was about 25% of the home loans that existed out there, whereas right now it's only about 2.8%. Interest is low, and for those people who do have a loan, have actually gone through the hurdles of the tightened criteria of banks lending money out. And even if you did struggle to pay the repayments, or the forbearance program is going to push you away from actually selling the property. And even if it did push you to the very end, after the 120-day period for you to actually foreclose on the property, you'll probably foreclose on that property and still make a lot of money anyway. It's going to cause problems if the interest rate went up really high and then all the property owners wanted to sell their property as well. The likelihood of both happening at the same time and at drastic measures, the chances of that is extremely low, because property owners don't really want to involuntarily sell their homes or their investments. They would rather choose a payment plan or some other option that would allow them to keep the property and continue their investment down the track. And even if they sell, where could they go to run their business or to have a home to live in? Because everywhere else is just as expensive. And as for mortgage rates, it's unlikely that it will increase suddenly. It's going to have to increase in little increments so that the economy has time to adjust to it. So to wrap your head around all of this, imagine an economy that was designed to actually push properties onto the market, that people who couldn't afford to own their property would be then pushed managed to be able to sell the property out into the market. And there were a certain number of buyers that were able to take that on and to actually re-trigger a new investment. But the problem is that right in between, there is this blockage, and it's called the forbearance program. In that forbearance program are low interest rates, increased terms. That's gonna make the people that usually can't afford to have this property not to be forced to sell out onto the market. But with the new interest rate that people are having access to, the buyers in the market are now increasing, and the property that need to flow out into the market have been blocked, which means that there is less inventory and there are more buyers, which is then driving up the prices pretty high in the market at the moment. So that explains how the property market is going super crazy right now. Now, how long is this going to go for? Well, I suspect it's going to be like this at least for the next 6 to 12 months. And after that, I really don't know what happens. I think the big trigger for this point was that on top of all the forbearance programs and also the really good interest rates that people are having access to is the stimulus package. The stimulus package in the first year of the pandemic was about $3 trillion. And right now, Biden has just announced another $1.9 trillion to be injected into the economy. So having faced that new stimulus, my view is that it'll probably continue to be on the rise as we have seen, and it'll be interesting to see how the mortgage rates will adjust to actually mitigate the economic boom that we're seeing right now. So it becomes quite obvious that people will continue to invest into properties, into stocks, into cryptos. So do keep an eye out on this market. And if you've got property right now, well, then chances are you've made a lot of money. If you're in crypto or stocks, you would have done quite well as well. So that's the explanation behind why the market has been going absolutely crazy right now. Thank you so much for tuning in today, and I hope to see you next time.